Hi, everyone. It's Terrence Young again, Chicago, Illinois, possessed the land. And I want to follow up on the conversation yesterday when I started talking about taxes, because it is that season. It's time to file a tax return, pay some taxes, or get a tax refund. So let's have a conversation about it again. This is part two. And if you missed part one of this conversation, you can go to my Facebook page on Possess the Land News, or go to my YouTube page, Possess the Land News, and you can find a video. You can find that copy, okay? Or you can just reach out to me, and I can help you find it too. But let's talk about taxes again. So there's two aspects today that I want to talk about, get into a little bit deeper. One is has to do with tax filing status. You can file as an individual, you can file as a married person, jointly, head of household, married person separate. There's all these tax filing statuses. So the first thing I want to say is make sure you talk to a tax consultant or someone, tax preparer, accountant, whomever it is, to help you determine which filing status is best for you. It impacts everything from your standard deductions to your itemized deductions and other benefits you can receive just depending upon your status. The other thing I'm going to say about the tax code is also you can go to irs.gov, and that can help you as well too. I like to reference that site because I visited that site many times, and it's helped me tremendously to just get insights on particular questions that I've had about taxes over the years. One of the things that I will say about the tax code is that it changes, and so there was a major change that got enacted. Was it earlier this year or last year? I can't remember now. Time has been moving so fast, but it's had a major impact too on taxes and stuff. So back to the individual. If you're following as an individual, even if you're following as married or whatever the case may be, you have a choice, and that is to do what's called take the standard deduction or itemized deduction. These are expenses that you can deduct from your taxes, which lowers your tax bill. If you're taking the standard deduction, it's kind of set the deduction you're going to get. I can't remember off the top of my head what that deduction is, but you can easily find out that information. And if you are doing your taxes yourself, you can find that information easily if you're using an application, or if you're working with a tax professional, they can help you decide that as well too. But on the standard deduction, it's just standard. You get a number, that's it. But if you are itemizing, one of the things that's very, very important is to make sure you have good record keeping. For instance, what are some of the common things that you can itemize or deduct from your taxes? If you're a homeowner, let's say, for example, if you're a homeowner, you get to deduct the interest that you pay on a mortgage. You get to deduct the real estate taxes that you pay. So those things are kind of set. You also get to deduct on your federal taxes the taxes you pay to the state that you live in or to the city that you live in as well too. Other kind of common deductions that individuals might have might include things like charitable contributions. If you're a person that donates things to charity, you can deduct the deduction for that as well too. And there's many other things as well too that you can deduct as part of your itemized deduction. And the importance of that is to know what's eligible to be deducted and what's not eligible to be deducted. For instance, you can run into a situation too where if you are covered by an employer's, say, 401k plan or pension plan or something like that, there still may be a possibility that you can contribute to an IRA and deduct some of that as well too. So taking deductions is critically, itemizing deduction is very important. Knowing what those deductions are, critically important as well too. And for most of us, if we are a homeowner, that interest that we deduct and that real estate taxes that we deduct can make a huge difference in the tax bill that we might have too. The other thing that I want to mention about these deductions is the difference between a deduction and a credit, because some of you might be eligible for some tax credits as well too. Now this gets a little deeper, and definitely find a professional, read about it. But a credit is a dollar for dollar offset against a tax liability. A deduction doesn't give you a dollar for dollar. It's going to give you a percentage. And that's a little accounting thing, but just know that there could be that there's a child care credit, I think, or child credit or senior credit. There's all these kinds of credits that are available that are out there as well too. Now, let's shift gears a little bit. Let's talk about something a little different. Let's talk about those of you who may be an entrepreneur, who maybe have a business, a sole proprietor, or who might have an LLC. Your tax statement is going to look a little different. It might be that you have to file a separate return. And most individuals are going to file what's called a 1040. Okay. If you're in business, you may have to file, I don't know, a 1025, or depending upon what kind of corporation or partnership you're doing. There's forms for corporations, there's forms for LLC. The LLC is probably the most common, the limited liability corporation. So you would file a separate return for that corporation, then which would then pass through your 1040. Okay, if you had a 1040, if you had income from other sources, let's say you had a job and you also had a side business, or you're trading, you own other real estate, or you're trading in the stock market. There's a whole lots of things that are still going to pass through your 1040 that may come from another return. And the thing about the 1040 is that the 1040 has lots of schedules. If you're doing something like a sole proprietorship, you will probably put that on what's called a Schedule C. If you're doing investments in the stock market, you would probably put that on a Schedule D. If you have one real estate property that you own in your name or something, not your house, you would probably put that on the Schedule E. So understanding what all those schedules mean and all that things do can sound very complicated. But again, I'll say over and over again, tax professionals, and do your research, do your homework. Now, for business owners, we don't really necessarily call them deductions. We will call them expenses. So you want to make sure that throughout the year you're doing proper bookkeeping. You're tracking your income, but at the same time, you're tracking your expenses so that you know what's eligible to that can be written off against your income to reduce your income liability. For instance, some business owners might decide to buy a car in the name of the business. There's some expenses you can deduct for that. Or they might have a home office, which is very common, work out of your home, and you're able to deduct some of the expenses for your home as well too. But let's say where it gets complicated is things like you have a telephone, you buy it, and you use it sometimes for business and use it sometimes for personal reasons. Well, one of the things that, and I'll just share with you, the decision that I recently made was to separate the personal phone from a business phone. So that way it's very clear. I have a phone for business that I can deduct the expenses for using that phone separate from my personal phone that I use. But expenses like home office, autos, travel, trainings, marketing, advertising, even the services that you use, accounting, legal services, all those things become expenses for your business. So if you're LLC, you're likely filing that on a different term for the 1040, but it's going to pass through your 1040. And the key there is just to make sure that you don't have to be an expert on doing taxes, but you do need to be an expert on tracking your income and expenses and making sure that you're working with a professional that understands your business and can help guide you in terms of what deductions or what expenses you can take and write off. You can hear about unusual things like, for instance, let's say you're an artist, and you paint for a living, or you are a model. You ask yourself the question, if I'm modeling clothing, can I deduct the cost of the clothing? Probably so. I'm not going to say absolutely yes. I'm going to say be careful, but the structure of the tax code, there are lots of benefits that you can receive from having a business, owning a business. And this is how wealth is created. It's created through business ownership, through investing, and understanding the tax code so that you minimize your tax liability and make sure that you do not fumble at the end and find yourself stuck in a situation where you're just overwhelmed by a tax bill that you did not expect. Careful planning, understanding your status, if it is a business, understanding tracking your income, tracking your expenses, what expenses are eligible to be deducted from your income. All those things are critically important. So we'll get deeper into this stuff a little bit later as we go along with this series. So just a recap, individuals, mostly just a 1040, you get a W-2, okay? You file a 1040, but you still must determine your filing status, whether or not you're going to itemize your deductions or take the standard deductions. And then there's some other aspects of the tax form too, other schedules, like Schedule C, Schedule D, Schedule E that I mentioned. All those schedules have a specific purpose and are used to report a specific type of income and expense. And so knowing the difference can make all the difference in the world. Now, if you're the business owner and you're filing something in addition to the 1040 or other than the 1040, then tracking income and expenses become critical for you as too. One of the reasons why I've always enjoyed being a real estate investor is that real estate is eligible for something called depreciation. And if you own property, just know this, it's a non-cash expense that you get to deduct every year, depending upon what type of property it is. There's some forms of depreciation you take immediately. There's other forms of depreciation you take over time. But I digress a bit. That gets into a deeper, more complex subject. So let's leave that on for a second. Just remember, it's tax filing time. Get your paper together, get your documents together. Consider using a professional if you're not already doing that. If you're a do-it-yourselfer, like some of us are, like myself, but I come from an accounting, finance, and a taxation background, so I'm comfortable with that. But there are times when I have questions, and my way of getting those questions answered mostly is going to irs.gov. Thank you. Again, Terrence Young, Possess the Land, talking about building wealth, talking about investing, talking about investing for ourselves, creating wealth for ourselves, for our families, for our communities, and wealth for generations to come. Thank you, thank you, thank you for tuning in. I'm going to sit here a second and have a glass of warm tea here, hot tea, really. And if you find this information valuable, as I said, you can find me on Facebook, find me on YouTube. You can go back and look at some of the other videos that I've done, Possess the Land, under that title. I'll post something at the end of the video so you can see clearly how to find that information. And so please share the video, comment on the video if you have an opportunity to comment on one of those sites. And thank you, and have a great day.